So you want to buy a house, but you kind of realize that you don't have that money in your account that you need to be able to buy it. And so now you're trying to figure out, okay, what do I do? I know that Jack said that the very first step is to fill out a mortgage loan application. What does that even look like? How do I even fill that out? What are the pieces? Okay, so let's talk about it. In a previous one, I talked to you a little bit about the high level. And obviously, the very first thing I said that you need to do is fill out an application. And I did give you the high level of that there's 3 different choices here. That you could do it in person, which is probably the least common way to do it anymore. You could do it over the phone. That's another choice. Or you could do it online, mortgage application online. And that's probably going to be your most common option now. And so let's talk about like, what is that application even like? What are the parts of it? Like, what does it look like? Just so you can kind of understand at a high level what they are and why they matter. So the application is kind of like an interview, right? So mortgage loan application is commonly referred to as either the uniform residential loan application or the 1003, which is the actual form number of the application. And it's basically like a snapshot of your financial history, and it's going to cover roughly 2 years or more. Okay, so at least 2 years, sometimes more if you've lived or worked for places for a lot longer than 2 years, etc. Okay. You're going to be asked questions like, where have you lived for at least the last 2 years? Where have you worked for the last 2+ years? What's your income? What's your assets? So like, the amount of money you've got in the bank account, all that kind of stuff. And so why all these questions and why 2 years? I get asked that a lot. And so from a lender's perspective, this is some things that you got to understand about the application. So number one, you're asking to borrow a lot of money, right? Like we're not just asking somebody to borrow like $500. Like this is hundreds of thousands of dollars. And so they want to make sure that you've got the money and the income to be able to pay it back. So we're going to need to verify that you do in fact have the income that actually allows you to pay this great amount of money back. So imagine it was your money, and would you lend such a large amount of money to somebody without wanting to understand what their financial situation looks like? You would probably want some kind of level of assurance to ensure that they could repay you and that the risk that you're offering chunking out this money is a solid one. Right? And I tell people all the time, even though you buying that house, it's a very emotional and personal thing for you. When it comes to the lending institution, it really truly is just about numbers. It's just about risk. It's just about numbers. And so that's why they are doing what they're doing. And so mortgage companies are simply doing that. They're asking the questions to determine what we like to call in this space credit worthiness. Okay. And in a very simple way to describe credit worthiness is just if you appear capable on paper of repaying this large sum of money over the course of time. Okay. And so even though, again, like I stated, this is a deeply personal experience for you, it's a business transaction for the lender. Okay. And so they want to determine what the statistical likelihood is, yes, again, math, of you repaying it. And they are doing that based on history. Okay. And so that's why we take a look at it. And so even though the questions may seem like a lot or a little bit overwhelming, don't overthink them. Just literally answer them. The last 2 years of your job history. If you didn't work during that period of time, you're going to note something like unemployed or you're a student, maybe something like that. And we do want a full 2 years, like actually full 2 years. So if you've been working somewhere for 1 year and 11 months, I know it sounds crazy, you still have to account for that one more month. Okay, so just make sure you do a full 2 years.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information.
Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4693733 107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
And so let's talk a little bit about if you're applying by yourself or with somebody else. So that's called individual or joint. And so understand that you can absolutely always apply to do a loan by yourself. If you are married or have a significant other that you want to buy with, then you can do it jointly. You can even do joint with a family member or even a really good friend, something like that, right? A sibling. We've done loans for all kinds of people over the course of time where it's been joint effort, right? That they're going to combine some of their finances and qualify. And like I said, it's not the traditional husband-wife scenario. Okay. And so let's talk a little bit about a fun story of who can be on the loan. So this is true. Back a long time ago when I was in a call center environment, I worked for a major lender in the game. And I got this call from these people and they wanted to refinance this property. And this property was owned by 15 couples. So 30 people owned this property together, and they basically had split it up kind of like DIY timeshare. It's like the easiest way that you can kind of think of it. And they had set it up this way, and they decided that they needed to make some repairs. And as opposed to each person dipping into their pockets to pull out this money, they decided to refinance and pull some money out to be able to do this. When they came to me, they said to me, well, we want all 15 of the men to be on the loan. Okay. This is traditional couples, male, female. And I'm like, no, you don't. And they're like, but why not? And I said, well, hypothetically, yes, 15 people could be on the loan all together, but I told them that it was going to be a little bit of a hot mess of paperwork because that more people, more problems. You ever heard that? Yeah, that's the case of mortgage too. More people, more problems, right? And so I'm not telling you not to do joint. Absolutely. We do more joint applications probably than we do individual. I'm just saying that you don't necessarily need every single person to be on the loan. They can still have ownership rights by being on the title of the property. So don't panic there. But yes, so we actually did get that group of individuals. Thank goodness. Praise the Lord, baby Jesus, to pick just about 2 or 3 of the best qualified people so that the paperwork became a little bit simpler and easy for them. Each person that's on the loan, guys, are going to have to submit income information. They're going to have to submit the credit report. They're going to have to submit all of this documentation. And so that's again why when you're filling out this application, kind of think it through. When in doubt, I do tell people go ahead and put anybody you think might be on the loan, and then we can always remove those people off. Don't worry about it. But if you're thinking about including 15 people, I highly recommend you just give that quick expert a call or a text or an email to see. They're probably not going to tell you to put 15 people on there. Some systems actually restrict how many people, but technically there isn't an actual limit. Okay. So anyhow, now other things that are going to be on application, it's going to be easy stuff. Your name, your date of birth, your social security number, how are we going to contact you, right? So phone numbers, email addresses, all of these kinds of things. This is all stuff. They also are going to ask you how many years of school you did. And they do mean high school plus anything beyond that. This has to do with understanding if the job that you hold, like if you're saying that you're a lawyer, but you only have 12 years of school, I don't think you're a lawyer if you only went to high school, right? There's this pesky little thing you got to get called a law degree. And so that's sometimes why they're asking for that. So just FYI. They're going to ask your marital status, and there is only 3 marital statuses, just so we're clear. There is married, separated, or unmarried. If you are divorced, you're unmarried, okay? So you're going to fill out that blank. That's pretty simple and pretty easy. Dependents. This is going to be anybody that you are claiming on your tax returns besides a joint applicant. So like if you're the primary breadwinner and you claim your spouse as a dependent, you don't have to put them under dependents, but this is going to be like children. It could potentially be parents. We've had that situation happen. Doesn't matter for a lot of different kinds of loans how many dependents there are, but there are some loan products, VA being one of them, where this is a very important question, is how many dependents do you hold? And so please make sure that you go ahead and you just fill that in, how many dependents you have and roughly what the ages of those dependents are. And I will give this little quick story to you on why it's so important to understand the dependents. So this almost bit me in the rear end. So I was doing a VA loan. We were actually doing cash out refinance for this gentleman, and he put down his dependents and he only put down his children. Well, then as we were going through the process, we got his tax returns and we noticed that he actually also claimed his dad as a dependent. And for a lot of loans, that wouldn't have mattered. However, for VA, there's this pesky little calculation called residual income, and it's based on how many people are in the household. And this is people in the loan plus any dependents. And so this literally almost bit the loan in the ass, and we almost had this major problem. And so it's why I just definitely tell you that you definitely want to include the information. Let the expert decide if they want to go ahead and take it out, but go ahead and put it in there anyway. You also are going to tell your address, what your present address is. You're going to tell us the last 2 years of that address. So again, this is important, 2 full years. You've been living at that place for 1 year, 10 months, doesn't matter. You need to make sure you put the address that was previous to that. Okay, 2 years. 2 is always, you're going to find in mortgage, 2 is kind of a magical number because you're going to provide 2 of a lot of things. 2 years history of income, 2 years history of where you've lived, 2, usually roughly 2 pay stubs, 2 months bank statements, things like that. See the two philosophy? Okay. Perfect. You're also going to include your mailing address. So if that's something different than where you're actually living, then you're going to make sure you mark that down. You're going to mark down whether you're renting or owning, and then the length of time that you actually are going to have at your present address. Make sure you include that. Again, this is important to make sure that we've got at least a 2-year history. Then again, that employer, like where you're working, you're going to include at least a 2-year history. You're going to do the name of the employer, the address. This can be the actual location you work at, or the corporate address, doesn't really matter. If you don't have that, don't panic. The expert can look it up. It's not the end of the world, but if you have it and it's handy, go ahead and slap it in there. If you are self-employed, there is usually going to check a box. If you're not sure if you're self-employed, I'm going to give you a little tip. If you get a form at the end of the year that says 1099 on it, okay, or you literally run your own business, you are self-employed, okay? If federal taxes come out of your paycheck all the time, you are not self-employed. You are a regular employed W-2 wage earner, okay? You're going to say how many years you have worked there and amount of years you've worked in the profession as well as what is your position there, like what's your actual job title, right? So you're just going to pop that into the box. And if you're an account manager, right? If you're a clerk, whatever it is, you're just going to pop it in there. Business phone number, it's super helpful here to include wherever we would verify your employment. If you don't know that, again, that's okay. You can always look it up later. A lot of times it's going to be like your HR department or maybe your boss, something like that. If you don't have it, again, don't worry. It's not the end of the world, but you can fill it out with as much accuracy as you can.
Stay tuned. We'll be back right after this message from our sponsors.
Welcome to Financial Mastery Simplified, your go-to podcast for making smart money decisions. We break down complex financial topics into easy-to-understand advice you can use every day. Our experts cover everything from budgeting and saving to investing and retirement planning. We give you the tools to take control of your money and build the future you want. With Financial Mastery Simplified, you'll feel informed and empowered to make the best choices for your financial health. Tune in to Financial Mastery Simplified on your favorite podcast platform Start your journey to financial confidence today.
Visit us at fms.tips and fms.college for more information.
Welcome to House U, where we believe in the power of education. At House U, we're more than just a brand. We're your partner in home ownership, dedicated to educating, equipping, and empowering you every step of the way. Education is at the heart of everything we do. We offer comprehensive resources designed to make home ownership simple and accessible for all. From understanding mortgage options to mastering home maintenance, House U provides the knowledge you need to make informed decisions with confidence. We host workshops and seminars, bringing together experts and community members to share insights and build a stronger, more informed community. Because when you're educated, you're empowered. House U, home ownership made simple for all. Visit our website or contact us today to start your journey with House U. Empower yourself with knowledge and embrace the joy of home ownership.
Thanks for your patience. Now back to our conversation.
Let's talk for a hot minute about why all of these things matter and what we're actually doing when we're filling out this application. So what we're doing is we are filling out a financial picture. We are helping the person who is making the decision about whether to approve our loan or not a full picture of what we've got going on in the last 2 years, okay? And so we want to make sure that the risk and the reward as far as a lending institution is solid. We want to make sure that we can recover our investment and plus interest, and that's the whole reason we're doing it. We're not just doing it for our health. We're not just doing it because, the investor's not just doing it because they like you. I may like you and my team may really love you, but that's not the reason that the back-end investor, the person collecting the money, is doing it. They're doing it because they want to make money. And so they want to make sure that we've got some stability here and that we will be able to pay the debt. And so we are going to be painting that financial picture with this application. It's why I encourage you to be as accurate as you can so that they can ensure that they understand when they're making the decision. I also like people to understand that the lending institution is not necessarily looking for perfection. If your history in the last 2 years is not perfect, it's not that is like the end all. It's ideal if it's great, but if it's not, that's okay. You just want to make sure that all the gaps are filled in, that we have a clear understanding, because this is how we are helping you go through and really understand, right? And so that is what is going to be important, is just making sure that we have gotten the best information that we can, because we want to understand what the situation is so we can advise you properly. If I don't have great information and accurate information from you, guess what? I could be giving you wrong advice, not because it's really what I wanted to do, but because I don't have all the information. So make sure that I have as much information as you can possibly muster so that I can help you make really, really great decisions. Some common concerns and some solutions for some of these things: job stability. We get this a lot. Well, I haven't worked at my job for the last 2 years. Okay, take a deep breath. You don't necessarily have to work at a job for 2 years for us to be able to qualify you to do a loan, okay? Were you working before that? Is your job self-employed now, or are you still W-2'd? Are you receiving a heavy amount of your income in things like bonuses or commissions, overtime? So some of these things may not be able to be counted if you don't have a 2-year history. That might be true. But just because you switch jobs does not necessarily mean that you cannot buy a house. So don't panic, okay? You just need to make sure that you tell us that this is what has happened so that we can help you understand. And so again, transparency is key here. Your expert cannot help you properly if we do not know. So make sure you're setting yourself up for success and that you're giving the information. Let me give you some examples, like a veterinarian, right? So we actually helped this individual buy a house right before they started a new job. So we're literally like transitioning from one job to another, because we had the offer letter and all of the employment conditions on that offer letter had been met, and we proved that. And so job start dates that doesn't always cause you to not be able to buy a house either. Again, Make sure that you are transparent with the expert. You let them know what's going on. And if you've picked the right one, they're going to advise you and they're going to help you. Another one we did. So we had a physician's assistant. We worked with her and she had unconventional income documentation because of the way that she did her hours. And so we were able to take an extra step. It took us a couple extra days to get her qualified, but we went and we got a specific document called written verification of employment. And it really helped us hammer down some extra things and get her qualified. And she actually almost lost a house that she loved because the other loan company couldn't get her qualified that way, right? So that's just going to be some things. Now, I'm going to give you a really quick way when you are putting down how much income you're making, some really quick ways that you can actually use your little calculator and figure it out for you. So if you're salaried, take your income every year, divide it in 12, pop that sucker in the box. Some applications will actually ask you if you want to put annual in. Most of them are going to ask monthly, just as a general rule. So, and your amount divided by 12, that's pretty easy. Okay. If you're hourly, then what you're going to do if you're trying to calculate your monthly income, you're going to take your hourly rate. You're going to multiply that by 40 hours a week, providing that you work 40 hours a week. If it's 35, it's 35, right? And then you're going to multiply that by 4.33. Why 4.33? Because guess what? There's more than 4 weeks in a month. There is 4 1/3 weeks in every single month. So that's why 4.33. Okay. So that's what's going to be the easiest way that you're going to be able to calculate that kind of stuff. By providing this clear and conspicuous financial picture, you're really, really going to help that expert make sure to set you up for success. Okay. Really quickly, before we end here, I'm going to tell you a little bit about part-time income because we get asked that question a whole lot. Is part-time income? How does it work? And can I have it? And can I count it? And all the things. Okay. I'm not going to go too much into the other types of income. I might do that in a later video because otherwise it gets a little bit too long. But one thing that you should know is part-time income can be counted, but only if it has been stable and consistent for at least 2 years. So if you just started the part-time job like a few months back, even 6-9 months ago, it's not going to count. You have to have had that job for a minimum of 2 years for us to be able to count it. Why? Well, it's a stability thing. They think that you may have been getting that job just so you can go ahead and qualify to buy the house and then you're going to leave it right away, which we have had people do. And so that's why they want to make sure that you're actually going to keep it. Other thing that I'll touch briefly on is bonus income, commissions, and overtime. So this is, again, a stability factor. We're going to be able to utilize whatever we can show as stable, and stable usually is 2 years. So if you've been getting overtime pretty consistently over a 2-year window, we may be able to use that overtime. Same with commissions, same with bonuses. The caveat here, and this is why it's so important for you to have an expert, is a lot of it depends on if it's been truly consistent or if you used to get a lot of it and now it's kind of downslid, because that is not as stable, okay? And so that is what they're looking at with that stability factor. So that's kind of getting into some of the kind of income aspect and income piece. And this hopefully gave you kind of a high level of like really what we're asking for an application, just kind of to give you like a big overview of what that looks like.